almost 5% already this month in its biggest three-day rally since March. Now, for more on commodities, here's our guest today, Dariusz Kowalczyk, Chief Investment Strategist at SJS Markets in Hong Kong. Dariusz, talk about gold. It's near $1,000 a barrel, but it's breached that level only 3 times. What are the chances it will happen again sometime soon?
I think it's not impossible that a short-term breach will occur, but fundamentally, my view is that I would be selling gold at levels near 1,000 because if you think of its role as a hedge against risk, I don't think there is that much to hedge against. I believe global economy will continue to come out of the recession, and equities and other commodities will move higher. When you think of gold as a hedge against the dollar's weakness, again, I believe that the greenback will move up versus other majors over the rest of the year due to the superior growth and later on interest rate differentials of the US. Only the hedge against inflation would be a reason for gold to move substantially up, but at the same time other commodities this week haven't really moved so much higher, so I don't think that there is much upside for gold in the near to medium term.
Some investors say if you take a long-term perspective, because of the lack of supply, gold will surge, and therefore it's a good investment, buy at any price and keep it.
I think when you look at almost any asset, if you take a long-term perspective, at current levels, which are way down from the peaks 2 years ago, it's a good buy to purchase and keep it, but there is much better ones than gold. And most other commodities have substantially stronger upside, such as a lot of base metals and energy. Why gold? Other asset classes such as equities are likely to do much better in the medium to long term. So yes, you can do gold. It's probably not going to fall as much in crisis as other assets, but in a positive long-term global environment, I think you will lose a lot of opportunities elsewhere if you purchase gold.
You indicated earlier that you will not be using gold as a hedge. Does that mean that gold is not necessary in one's portfolio? Because some people have suggested that perhaps you need gold in your portfolio as a hedge.
Obviously, gold is very useful as a hedge, but the usefulness of any hedges depends on the amount of risk in the system. And I believe that risks have diminished substantially from levels a year ago, for instance, when it did make sense to purchase gold. So my strategy right now would not be to look for safe havens, but rather for opportunities to further capitalize on the recovery of the global economy. And in such an environment, I wouldn't be really focusing on putting hedges into my portfolio, and therefore I wouldn't be really looking for gold as a hedge as well.
How about the movements between gold and the dollar?
There still is argument to be made that if dollar is going to fall, there would be upside for gold. But I think the degree of global risk aversion have in recent months been a stronger factor here. And I think that risk aversion will dissipate further. So even if dollar declines, I don't think gold will move substantially above 1,000, and definitely not in a lasting manner. Besides, I believe that the greenback will gain against the euro to 137 by the end of the year, against the yen 100. So from the currency perspective, there also, I believe, is no argument to purchase gold.
Dariusz, there's a question here from a viewer who wants to know where you think gold is headed and whether it is a speculative commodity at this point in time.
I believe that the rationale behind investing in gold is partially speculative, but to a large degree, industrial or playing on demand for jewelry at this moment. In terms of my target for the end of the year, it would be 950, about 4% down from current levels, and therefore I would advise a reduction in allocations of gold in portfolios.
Dariusz, do you like silver? It's been moving along with gold.
Indeed, and with some more volatility, but its role as a hedge against risk hasn't been that pronounced because of stronger industrial applications. So I would think that at this point, downside for silver is lower in case risk appetite improves, and upside is probably higher if the global economy continues to recover. So I think silver is more attractive relative to gold.
But silver has advanced 41% this year alone compared with gold, which is up 13% in the same period. Isn't it overdone?
I don't think it's overdone. In fact, gold has historically exhibited lower volatility. When you look at other metals, let's say lead is up, I think, 160% so far this year. Pretty much any other commodity is up much more than gold is. So 30% compared to other metals, energy, some agricultural products is really not that much.
All right, Dariusz Kowalczyk, thank you so much for your insights on Asia Confidential today. Now, still to come on AC, it's Friday and